The Treasury Department and the Internal Revenue Service have launched the Employee Retention Credit, designed to encourage businesses to keep employees on their payroll. The refundable tax credit is 50% of up to $10,000 in qualified wages paid by an eligible employer whose business has been financially impacted by COVID-19. Wages paid after March 12th of 2020 and before January 1st of 2021 are eligible for the credit. Wages taken into account are not limited to cash payments, but also include a portion of the cost of employer-provided health care. As a quick note, an employer is not eligible for the Employer Retention Credit if they have received a covered loan under the SBA's Payroll Protection Program. Eligible employers for the purpose of the Employee Retention Credit are those that carry on a trade or business during calendar year 2020 that experienced a full or partial suspension of operations during any calendar quarter in 2020 due to orders from an appropriate governmental authority limiting commerce, travel, or group meetings for commercial, social, religious, or other purposes due to COVID-19, or experienced a significant decline in gross receipts during any calendar quarter. The operation of a trade or business may be partially suspended when a state governor issues an executive order closing all restaurants and bars to stop the spread of COVID-19, but allows those establishments to continue food and/or beverage sales on a carry-out, drive-through, or delivery basis. Gross receipts include amounts of revenue received in any form, including but not limited to cash, credit, and checks from all sources. More than likely, food and/or beverage sales are the main source, if not only source, of revenue. However, amounts recognized from all other sources must be properly considered. The starting point for gross receipts is total sales for the quarter minus comps and discounts for the quarter, which is often referred to as net sales. Some examples of other common sources of income include rents collected from tenants for property or land, income from providing services, charging clients for the use of banquet equipment such as dishes or silverware, banquet labor, and dividends and interest earned by the business. A significant decline in gross receipts begins with the first quarter in which an employer's gross receipts for a calendar quarter in 2020 are less than 50% of its gross receipts from the same calendar quarter in 2019. For example, if a business had a single source of income from food and/or alcohol sales, and in quarter 1, 2019, the business had gross receipts of $250,000, and in quarter 1 of 2020, the gross receipts are $120,000, the business would be considered having a significant decline in gross receipts, and the employer would be eligible for the Employer Retention Credit for qualified wages paid in quarter 1 and quarter 2 of 2020. The significant decline in gross receipts would end on the last day of a quarter in which gross receipts of that quarter were at least 80% of the same quarter last year. An employer is eligible to take the Employee Retention Credit in the quarter in which the 80% threshold in gross receipts is reached, but not the following quarter. Continuing from the previous example, if the business has gross receipts in quarter 2 of 2019 of $200,000 and gross receipts in quarter 2 of 2020 of $150,000, sales in quarter 2 of 2020 are 75% of quarter 2 2019. Therefore, the employer would now be eligible to take the Employer Retention Credit for qualified wages paid in quarter 1, quarter 2, and quarter 3. Now, if the gross receipts in quarter 3 of 2019 were also $200,000 and the gross receipts in quarter 3 of 2020 were $165,000, which is 82.5% of quarter 3 2019, an employer would be ineligible to take the Employee Retention Credit on qualified wages paid in quarter 4 of 2020. Employer is still eligible to take the Employer Retention Credit for qualified wages paid in quarter 1, quarter 2, and quarter 3 of 2020. The year versus year metric trend report and report card can be used to determine if your business has had a significant decline in gross receipts. This report will provide necessary data to help you calculate your restaurant's eligibility due to a decline in sales from any quarter in 2020 compared to the same quarter in 2019. This report will also provide necessary data to calculate when your eligibility to take the employer retention credit has ended because your gross receipts from the current quarter have reached 80% of the gross receipts when compared to the same quarter last year. Qualifying wages are based on the average number of full-time employees a business employed in 2019. According to the CARES Act, the number of full-time employees is calculated the same way as under the Affordable Care Act, IRC, Section 49800H. The Full-Time Equivalent Report and Shift Solutions can help you calculate your FTEs. To run the report, go to the Reports tab in Shift Solutions, select your unit, and set the date range to 2019. Note, this report cannot be created for more than 12 months. Once ran, this report will show your average full-time equivalents per month and the total full-time equivalent count for the date range of the report. For employers with 100 or less employees on average in 2019, qualified wages are all wages paid to all employees except paid leave wages under the FFCRA, regardless if they worked or not. If the employees worked full-time and were paid for full-time work, the employer still receives the credit. For employers with more than 100 employees on average in 2019, qualified wages are the wages paid to an employee for time that the employee is not providing services, except for paid leave wages under the FFCRA. Qualified wages paid while an employee is not providing services may not exceed the dollar amount that the employee would have been paid for working the 30 days immediately preceding. For example, if you were paying an employee while that employee was not providing services and that employee had made $2,500 in the prior 30 days, qualified wages for the employee retention credit can only include up to $2,500. Let's break down how the employee retention credit is calculated. The credit equals 50% of the qualified wages, including qualified health plan expenses, that an eligible employer pays in a calendar quarter. The maximum amount of qualified wages taken into account with respect to each employee for all calendar quarters is $10,000, so that the maximum credit for qualified wages paid to any employee is $5,000. Here are some examples. If eligible employer pays $10,000 in qualified wages, including qualified health plan expenses, to employee A in quarter 2 of 2020, the employee retention credit available to the eligible employer for the qualified wages paid to employee A is $5,000. If eligible employer pays employee B $8,000 in qualified wages, including qualified health plan expenses in quarter 2 of 2020, and $8,000 in qualified wages, including qualified health plan expenses in quarter 3 of 2020, the credit available to the eligible employer for the qualified wages paid to employee B is equal to $4,000 in quarter 2 and $1,000 in quarter 3 due to the overall limit of $10,000 on qualified wages per employee for all calendar quarters. The employee retention credit will be claimed on Form 941 for the quarter in which qualified wages were paid. For example, an employer that paid $8,000 in qualified wages during quarter 2 of 2020 would be entitled to an employee retention credit of $4,000. Credit is 50% of qualified wages on quarter 2, 2020 Form 941. This amount could be requested on Form 941, or a business can file Form 7200 and request an advance payment of employer credits due to COVID-19. RSI can prepare Form 7200, but additional charges may apply. The IRS indicates that credits will be refunded in 2 weeks if Form 7200 is utilized. An employer is not required to pay qualified wages to its employees under the CARES Act. In addition, eligible employers may elect to not claim the credit for the employee retention credit. Therefore, it will be the responsibility of each client to communicate to RSI each quarter in which the employee retention credit is to be taken. Here are some important items to note. The CARES Act states that an employer is not eligible for the employer tax credit if they have received a covered loan under the SBA's Payroll Protection Program. The CARES Act states that an employer is not eligible for the employer tax credit for any employee in which the work opportunity tax credit has been taken. The CARES Act states that qualified health plan expenses means amounts paid or incurred by the employer to provide and maintain a group health plan. There has been no guidance on the record-keeping requirements for the employee retention credit, but it is anticipated that supporting documents will be required. For example, a letter from the state or local agency that required the restaurant to suspend business or a notice posted on the web could be supporting documents to substantiate a full or partial suspension of business. Accounting records and POS reports could be used to substantiate a decline in gross receipts. The IRS has released guidance on the 941 that states if you paid any qualified wages for the employee retention credit between March 13th of 2020 and March 31st of 2020, inclusive, you will include 50% of those wages together with 50% of any qualified wages paid during the second quarter of 2020 on your second quarter Form 941 to claim the employee retention credit. Do not include the credit of your first quarter Form 941. Therefore, the credit cannot be taken on Quarter 1 2020 Form 941. Taxpayers must wait until filing the second quarter 941 to request the credit. The IRS has some great resources in regards to the employee retention credit that can be found at the links shown. The business's responsibility to ensure RSI takes the credit for your business are as follows. First, determine if your business qualifies to take the employee retention credit, partial suspension, or a significant decline in gross receipts. Second, communicate to RSI compliance through a support request after each quarter how many FTEs the business employs and that the business qualifies for the employee retention credit and would like to take the credit for the prior quarter. Quarter 1 of 2020 credit will be taken on Quarter 2 2020 Form 941, so make sure both quarters are indicated in the support request if your business qualified for the ERC in both quarters. Communicate in the support request any employees in which the WOTC has been or will be taken. If the business has more than 100 FTEs, please indicate in the support request the employees that were paid for not providing services. Third, communicate to RSI compliance through a support request after each quarter, if necessary, the amount of qualified health plan expenses for each employee. This is the amount the business paid for the employee's health plan, not the deducted amount or total amount. The amount must be broken out by employee because of limits on the employee retention credit by employee. Please note that RSI can provide a spreadsheet of your active employees to fill out with the employer qualified health plan expense. Lastly, determine when the business's decline in gross receipts has ended. Remember, the quarter in which the business achieves 80% sales compared to the same quarter in 2019 is still eligible for the employee retention credit in that quarter. It is the quarter following that the credit can no longer be taken. Once a support request is received, RSI will report the qualified wages and health plan expense and employee retention credit on quarterly IRS Form 941 and file Form 7200 advanced payment of employer credits due to COVID-19 if applicable, to request a refund of the employee retention credit amount. Once received, the refund should be recorded through a miscellaneous deposit and coded to the employee retention credit GL. The GL number will vary by client, but will be set up and available for recording the deposit. The GL will be displayed at the bottom of the P&L in the Other Income section, which will allow your year-end tax preparer to easily identify the amount of employee retention credit taken. For any questions, please reach out to the RSI compliance team.